welcome to Trade Talks. My name is Yogesh. Striking just as the global economy was showing signs of re-acceleration, the spread of a new virus from China to other countries has raised fears that it could impede growth. Reacting to memories of the short-lived economic damage done by the SARS virus in 2002 and 2003, equities market worldwide retreated this week. The decline was led by energy shares retreating in the face of lower oil prices as travel shutdowns reduced demand. In fact, the price of WTI crude dropped more than 7% this week and is now off 18% from its high earlier this month. Global government bond yields fell and safe haven assets like gold and the US dollar edged higher. The week began with US markets closed for Martin Luther King Jr. Day and world leaders meeting in Davos, Switzerland, with headlines from the gathering focused on trade. First, US President Donald Trump and French President Emmanuel Macron announced a truce until year-end in their dispute over digital taxes on companies like Amazon and Google. Shortly after that, President Trump threatened to put tariffs on European autos if EU leaders don't offer more compromises towards a trade deal before the year's US elections. Meanwhile, earning reporting season continues with S&P 500 aggregate earnings on track to be up just over 2% year over year. So far, about 70% of constituent companies have beaten consensus estimates. Most major European equities markets fell. Adding to the pressures from the coronavirus outbreak and from President Trump's trade threats, investors in Europe can now also worry about renewed political instability in Italy. The country's coalition government is close to collapse after the resignation of Luigi Di Maio as leader of the Five-Star Movement. Equities in Hong Kong and Shanghai were especially weak as fears of the Wuhan virus intensified. Chinese stock markets are now closed until January 31st for the New Year holiday. In Italy, a vote looms on Sunday in the traditionally leftist Emilia-Romagna region. The outcome will likely have an impact on the perceived likelihood of a new Italian election later this year. A further rise in European political uncertainty might dent the Euro-Italian bonds. The FOMC rate decision is due on Wednesday, 29th January. Any tightening of the Fed's balance sheet or liquidity policies could eventually create headwinds for risk sentiment, but probably not yet, especially as the US Treasury looks set to add plenty of dollar liquidity into the system due to tax refunds in February. The Bank of England's rate decision that same day is more interesting as the odds of a rate cut have been gyrating widely over the past month. And how can we forget it's Britain's final week as a member of the EU. Friends, that's all from my side this week. Stay tuned for more market updates and trade safe. Thank you so much for watching this video. To keep yourself updated about the latest happenings in the world of financial markets, subscribe to this channel. To register for our weekly seminars, click on www.century.ae. My name is Yogesh and you have a great week ahead.